This is case in point 1-4, record transactions. We will be going over transactions 1 through 5 here. This case is based on the transactions that we looked at in case in point 1-3. In that problem, we simply determined what the effect was on the accounting equation of those transactions. In this problem, we will be recording the transactions, and at the end of the second video, we will calculate the ending balances for each account. The first transaction, Nathaniel is going to invest $35,000 to open Nathan's donut shop. So he's putting cash into the bank account. The bank account will increase by $35,000. Nathaniel's capital account will increase by $35,000. And notice this transaction balances, meaning our assets equal our liabilities plus our owner's equity in the actual transaction. And then at the end of the transaction, our accounting equation still balances. Our total assets equal our liabilities plus our owner's equity. In transaction number 2, Nathan's Donut Shop is going to pay $20,000 for baking equipment. So our cash is going to decrease by $20,000. He's paying $20,000. That cash account needs to go down, and our equipment account, which records the cost of our equipment, is going to go up by $20,000. Notice this transaction still balances. The assets increased and decreased by the same amount, so that was zero change on the asset side, and then zero change on the liabilities and owner's equity side in that transaction. And then we go back and we check our accounting equation. Does that still balance? Our total assets equal $35,000. You can see that total right here. Excel calculates it for us. And our total liabilities and owner's equity also equal $35,000. So our accounting equation balances when we calculate that total and make sure it balances, and our transaction balances when we confirmed that in our transaction our total assets equal our liabilities and owner's equity. In transaction number 3, the company is going to purchase $500 worth of supplies and $1,000 worth of furniture on account. Be careful of that word account. When we're purchasing something on account, it means we're not paying cash for it, but we're going to owe someone for it later. Just like a credit card. If you purchase something on your credit card, you're going to have to pay that amount later. So our accounts payable increases by $1,500. I now owe someone $1,500 or two someones. And my supplies account will increase by $500. And my equipment will increase by $1,000. And after every transaction, just go back and make sure that transaction balances. Our total assets equal $1,500. Our total liabilities and owner's equity equal $1,500 in that transaction. And then I'm going to double check my accounting equation. My total assets are $36,500. My total liabilities and owner's equity are $36,500. In transaction number 4, Nathan's Donut Shop opens for business and on its first day earns $850. As of now, Nathan's only accepting cash. So cash is going to increase by $850, and then his revenue account is going to increase by $850. So again, double check that transaction. Do we balance? Total assets equal total liabilities and owner's equity in that transaction. And then does our accounting equation balance? So total assets equal $37,350. Total liabilities and owner's equity equals $37,350. Transaction number 5, the company is going to pay off the $1,500 that was owed from the purchase of the supplies and the furniture. So we have already recorded our supplies and furniture in here. We don't want to record that again. What we want to record is the payoff of the accounts payable. So we put funds into that accounts payable, or the amount owed into that accounts payable, with an increase. To get it out of there, we're going to decrease it. So we're going to decrease accounts payable by $1,500. Notice now we have 0 due in our accounts payable, and we paid that with cash. So our cash is going to go down $1,500. Okay, so let's check. Does our accounting equation balance? We've got total assets of $1,500 in this transaction, total liabilities and owner's equity of $1,500, and they're both decreasing. So the accounting equation balances. The transaction balances. Let's check our accounting equation as well. Our accounting equation is $35,850 in my assets, in my liabilities, and owner's equity. The total is also $35,850. So we do balance. So that is through transaction number 6. We will begin with, transaction number 5. We will begin with transaction number 6 in the next video. Thank you.